Okay, so this is a QuickBooks overview, essentials every user should know, and I'm Jessica Chisholm. I'm a CPA at Huddleston Tax CPAs, and we're located just outside of Seattle, Washington. Before we get started on the presentation, I just want to first show you our website, huddlestontaxcpas.com, and just let you know that we specialize in small businesses, tax preparation and planning, small business coaching, QuickBooks training and bookkeeping, payroll, pretty much anything a small business might need help with. So if you need any accounting help after this is over, feel free to contact us. Even though we're located just by Seattle, we do have clients all over the country actually, and all over the world actually. So feel free to give us a call or email us if you have any questions. I also want to show you smallbusinesswebcast.com. Some people come to us from other websites other than smallbusinesswebcast.com. So if you found us another way and you haven't visited smallbusinesswebcast.com and registered, I highly suggest that you do so. You'll be made aware of any future webcasts that we have. Some of our other webcasts, I also do one tax tips for medical professionals, and then tax savings with real estate ownership explained. Lance Holbert, another CPA at our office, does tax update. He discusses the new tax legislation. John Huddleston does LLCs and S Corps explained, using them to reduce taxes. Let's see. I also do tax savings for construction, architecture, and engineering firms. And then Jennifer Zhao, another CPA at our office, also does tax tips for the self-employed. But she is gone for the summer, so she'll start that one again in the fall. We're also hoping to partner with other professionals to get other non-accounting webcasts up here, so definitely make sure you're registered so you can be made aware of future webcasts. Okay, so go ahead and get started here. So I'm going to go over what I want to talk about today. First thing we're going to talk about is which version of QuickBooks is best for your business. Talk about how to memorize reports, how to make accounts inactive, and why you would want to make them inactive. Making, canceling, and using an accountant's copy. Making adjusting journal entries, reconciling a payroll account when you're using an outside payroll service, and then recording deposits in the undeposited funds account. Looks like we just had a couple more people join us, so I'm just going to make sure the audio is muted. Okay. So let's go on to the first thing I want to talk about. So there are 4 different versions of QuickBooks that you can use. First one is QuickBooks Online, then there's QuickBooks Pro, QuickBooks Premier, and QuickBooks Enterprise Solutions. So with So with QuickBooks Online, you can access it anywhere you have the access to the internet. So there's no desktop version that you would install on your computer. You would access all your information totally over the internet. With QuickBooks Online, you pay a monthly fee, so that the least expensive version starts at $12.95 a month, and it goes up from there depending on what features you need from the QuickBooks. One nice thing about QuickBooks Online is that your accountant can have access at any time without you having to email them a backup or an accountant's copy. Also, you can have multiple users logging in. So if you have maybe multiple owners of the business and each one wants to be able to log in and check things out without having to have it on their own computer, QuickBooks Online is an easy way to do that. And like I was saying before, there are different levels, so there are different prices. And the cheapest one, the $12.95 a month, does not do payroll. So not all of the versions do payroll, so you will have to pay more to have the QuickBooks calculate payroll for you. The next version is QuickBooks Pro. So that is a desktop version that you can buy at the store. It is the most basic version of QuickBooks. You can have 3 simultaneous users with QuickBooks Pro. And Pro does work great for most small businesses. You can do QuickBooks or do payroll on it if you pay for the payroll subscription, which is an extra cost. You can pretty much do anything that a basic small business would need, unless you're wanting to do a lot of inventory work. If you have a business that involves inventory, then probably QuickBooks Pro is probably a little too basic for you. So the next level is QuickBooks Premier. Something that Premier does that Pro does not do is it can track by class. So if you have multiple locations or multiple projects, maybe you're in construction and you want to track expenses by project, you would want to be able to track by class. So I would recommend QuickBooks Premier. Premier also offers a few industry-specific reports that Pro would not, and it allows for 5 simultaneous users. So if you are needing to have multiple people in the office access it at the same time, you might need to consider getting Premier if you need more than 3 people. QuickBooks Enterprise Solutions is the most advanced version. They sell industry-specific versions, so you can get enterprise solutions for contractors and things like that. It also allows for large inventory tracking. So if you have a retail store, enterprise solutions might be best for you. It is definitely the most expensive version of QuickBooks. It also allows for 20 simultaneous users. So if you have a larger office where multiple people are needing to access QuickBooks all at the same time, then enterprise solutions would be the way that you would want to go for that. Okay, so that's the different versions of QuickBooks. And again, for those people that are joining us after I've already started, if you have any questions as I go along, I have everybody's audio muted, but you can feel free to ask questions in the chat, or I'll open it up for questions at the end. So the next thing I want to discuss is memorizing reports. So if you use a specialized report or have a report that you use on a regular basis, it's often a good idea to go ahead and memorize that report for easy future access. So the way you would go about doing that is you would pull up the report that you use. So in this example, I'm just going to pull up a basic profit and loss from under company and financial. Once you have it open, you'd make any adjustments that you prefer to make it customized to your business. Maybe you put extra columns in for comparative view. Maybe you like it to show detail. You just customize it however you like to view it. And then once you have it all customized, you click Memorize Report on the top left of the report, and it pops up in the Memorize Report box. So in this case, I've named it Custom Profit and Loss. So you're going to need to give it a name so that you recognize which report it is. And then you choose which Memorize Report group you'd like to save it in. So there's accountant, banking company, customers, nonprofit vendors. You choose which heading you want it to show under the reports. And then you hit OK. So in order to access it, once you've memorized it, you go to Reports, under Memorized Reports, and then you need to remember which heading you saved it under. So in this case, I saved it under Company, so then you'll see it there as Custom Profit and Loss. So it just makes it easy. If you find it where you're opening a report, every time you open it, you're having to go in and customize it to the view that you want it to be in, then I would definitely suggest just memorizing it to save you time, so that when you need to access that report, you can just go into the Memorized Reports and open it right away. It's just a little quick tip for time-saving purposes. The next thing I want to go over is making accounts inactive. So what accounts would you want to make inactive? So some examples would be old bank accounts that are no longer in use. Maybe you closed out an old checking account and opened a new one. You'd want to make the old one inactive. Old loan accounts that are paid off, unused credit cards, basically any account that you don't want anything accidentally posted to. Making them inactive is just makes it so that you're not able to post to them, and it reduces your chance for errors for when it comes to posting. So first what we need to do is go up under List and pull up the chart of accounts. Once you have the chart of accounts open, you need to highlight the account that you'd like to make inactive. So in this case, we got a new checking account, so we're making the old checking account inactive. So once the old checking is highlighted, you go down to the bottom under Account, and under Account, you select Make Account Inactive. So once you select that, it will disappear off of your chart of accounts. So you'll no longer be able to see that old checking. It's gone off your view. So the account has not been deleted. It is still there, and you are still able to access it. When you're making a journal entry or posting a deposit or something like that, the old checking account will not show up as an option to post to. But if you need to go back and make a prior period adjustment, or you maybe make an unused credit card inactive and you start using it again, what you would need to do is have your chart of accounts open like this, go back under Account, and there'll be an option that'll say Show Inactive Accounts. So once you show the inactive accounts, that old checking account or whatever accounts you made inactive will show back up in your chart of accounts, the black X on the left-hand side of them. If you need to make them active again for posting, you just double-click on that black X and they'll be active again. If you do activate an old account to make a prior period adjustment, make sure that when you're done making that adjustment, you make that account inactive again so that you don't accidentally post to it in the future. So the next thing I want to go over is the accountant's copy. So why would you use an accountant's copy instead of just making a full backup copy? When you have an accountant's copy, you can send it to your accountant or bookkeeper and continue to make changes in your own file while they have the accountant's copy. If you send them a full backup copy, then while they're using it and making adjustments, you are not able to make any adjustments to your copy. If you make adjustments to your copy and they make adjustments on theirs, you're not able to integrate the changes. If you restore their changes over top of your file, you will lose any changes you made since you sent them that file. But with an accountant's copy, you're able to continue to make changes. You're able to import the changes that your accountant made, and it won't overwrite what you've done. Also, you can move your file to a different computer, like maybe your home office, without making a full backup. So maybe you're working in your office on your desktop computer. You want to work from home that night, but you didn't have a laptop to take it home on, so you make an accountant's copy, email it to yourself, go home, restore that accountant's copy in your home office, make the changes, make an accountant's changes file, email it back to yourself. You're not having to make a full backup. You save some time, and you don't have to worry about overwriting files. So how do you go about making an accountant's copy? Oh, and before I go over this, I just want to let you know that we will be emailing you PDFs of all these slides you've seen today. So if I go through something too fast, you don't have to worry about writing it down because we will be emailing the slides to you. So to make an accountant's copy, you go up under File, then to save copy or backup, just like you're making a full backup copy, you choose accountant's copy. Once you choose accountant's copy, it's going to ask you for a dividing date, and you need to make sure you choose the correct dividing date. So an example of a dividing date would be if your CPA is working on your tax return, maybe they're working on your 2010 tax return, you would make the dividing date 12/31/2010. So what that means is 12/31/2010 prior, your CPA is able to work on your account. 1/1/2011 and forward, you are able to continue working on your account. So your CPA can make past adjustments and you can make present adjustments simultaneously. So that's why it's important to choose a dividing date. You need to know the date that whoever's working on your account needs to work on it, what time period they need, and set the correct dividing date based on that. So once your accountant or bookkeeper or whoever's working on your account is done making whatever changes they need to make, you'll need to import those accountant's changes. So the accountant will send back the accountant's changes file, and you'll need to import it into your QuickBooks. So you'll go up under File, then Accountant's Copy, then Client Activities, and then Import Accountant's Changes. So it's going to show you all of the changes that your accountant made, and it'll integrate them into your file, and you'll just be able to continue working with those changes integrated. So here's what that menu looks like. Under accounts, copy, client activities, and then the choices under client activities are to save file, send to account, import account changes, or remove restrictions. So we're going to talk about removing the restrictions here. So what happens if your accountant doesn't send back in changes file or there were no changes? Basically, while you have a changes file outstanding, the top of your QuickBooks is going to say, accountant's copy is, basically it's going to say that you have an accountant's copy outstanding, and it's going to wait for you to import the changes. And like I was saying, if you make a dividing date of 12/31/2010, you're not going to be able to work on anything 12/31/2010 and prior until you get that changes file back. So you need to integrate that changes file, or you need to cancel the copy. So if there were no changes and you want to cancel that copy so that you can make prior period adjustments, you would go up under File, Accounts Copy, Client Activities, and then Remove Restrictions. And it's going to double check with you to make sure you really want to do that, because if you remove the restrictions and there are changes, you're not going to be able to import those. Any changes that were made, you're going to have to make manually. So definitely do not cancel that accountant's outstanding accountant's copy if there's going to be changes sent back to you. So the next thing we go over are adjusting journal entries. So some reasons for adjusting journal entries would be to record account changes. So maybe you didn't send an accountant's copy, or you removed the restrictions too soon and there were still changes. You can make those changes using journal entries. Recording depreciation from the tax return, recording payroll from an outside payroll service, and recording out-of-pocket shareholder transactions. So those are just some examples of why you would use journal entries. So I'm going to show you a sample journal entry. So what you would do is go up under Company. I have it pulled down from Accountant here, so I'm using Premier Accountants Edition, but it's also under Company. You pull up the Make Journal Entries option. The journal entry is going to open, and so I'm going to be doing a shareholder contribution journal entry as an example. So first what you want to do is set the date. So the date's going to default to today's date. So you need to make sure to adjust that to the date of the transaction that you're recording. So in this example, there's a shareholder out-of-pocket expense on January 15th, 2010. So then next you need to look at the entry number. So it's just going to go chronologically, 1, 2, 3, 4, 5, 6, 7, unless you change that. So you can change the entry number to be whatever you like. The first account in this example, so basically a shareholder purchased a printer for the company out of pocket and wants to put it in as a shareholder contribution. So the first account is furniture and equipment, and you debit that account for the $500 printer purchase. The offsetting account is shareholder contributions, so there's a credit for $500. So that records that printer as being purchased and shows it as a shareholder contribution. So once you're done, you'd hit Save and Close, and the journal entry would be recorded. So some notes about the journal entries. Make sure to make notes in the memo box. If your CPA is doing your tax return, looking back at entries you made, it's nice to know exactly what those entries are for. Like in my prior example here, I wrote to record shareholder out-of-pocket printer purchase. So if your CPA was doing the taxes, they would know that, okay, this is for a printer and I need to capitalize that. Also, debits increase expense accounts and credits decrease expense accounts. It can get confusing as to whether or not an entry needs to be a debit or a credit. And also, like I was saying before, please make sure that the date is correct. Okay, so now I want to go over reconciling your payroll account. So when you're using an outside payroll service, you need to make sure that your QuickBooks record of the payroll is up to date and correct. It'll give you a more accurate view of where your business stands if you have all the payroll entered correctly. So there's two ways to enter that payroll. One is using the journal entry method, and one is using fake checks. So with the journal entry method, you're going to enter the payroll from the payroll service using one lump journal entry, and it's going to be the easiest and fastest way to record the payroll. However, it does make reconciling the bank account harder if not all the checks clear right away. So in most cases, people cash their payroll checks pretty quickly. but occasionally you will have someone that doesn't cash it right away, and it can get moved into the next reconciliation period for the bank. And if you enter the entire payroll as one lump journal entry, then you're not able to clear individual checks as you go. So if you just have yourself on payroll or yourself and one or two other employees and they cash their checks and right away, then the journal entry method would work fine for you. So here's the example of the journal entry you would make. So you would put the date of the payroll. The first account would be wages or salaries, whatever payroll account you use in your chart of accounts. The debit would be for the gross wage. So in this case, it's $10,000. And then in the memo box, you need to write gross wages. The next account would be payroll tax expense. So that would be the employer portion of the payroll taxes. So the Social Security and Medicare. So in this case, $765. The next line would be to your checking account or whatever cash account the payroll checks are coming out of. You would credit for the net payroll check amount. Hold on just a second. Okay, sorry about that. So the next line would be for your cash account, and you would credit that for the net payroll check amount of $9,000. So that's whatever cleared your bank account. And then the last line would be to your cash account again, in this case checking, and that would be for the IRS withholding check. So in this case, it would be $1,765. So once the journal entry balances, then you're able to save and close, and that records that payroll. So that was the journal entry method for recording the payroll. It's just a one lump journal entry. It's fast, it's easy. But if you want a more individualized method where you can see everybody's payroll check separately, you're going to use the fake check method. So this is the most time-consuming method, but it's also the easiest for bank reconciliation because you are able to check off individual checks that cleared the bank. So what you would do is enter a fake check into QuickBooks for each employee for the net payroll amount. Then you would enter a fake check into QuickBooks for the IRS tax remittance amount. So once you enter the fake check into QuickBooks for each employee's net payroll amount, you put that to the salaries or wages account or whatever account you use. And then the way you gross up that payroll is by using this payroll check. So what you would do is make a payroll check to the IRS, and the date would be the date of the payroll. So in this case, our employee and employer withholding was $1,765. So then we put that into the check, and under the accounts down below, the expenses, the first account would be payroll tax expense. So again, that would be the $765 for the employer's payroll tax expenses, Social Security and Medicare. And then the next line would be wages. And so that would be the $1,000 of the employee portion of the payroll tax expense. So that $1,000, so in this case, the net checks would have totaled $9,000. So this $1,000 of employee tax expense then grosses up our wage account to show the correct gross wage amount. So if you look at your profit and loss, it would show under wages $10,000. So that's how to reconcile the payroll accounts. The next thing I want to go over is the undeposited funds account. So in my experience, when I get people's payroll or QuickBooks files, an account that oftentimes has a lot of problems is the undeposited funds account, because I don't think people skip a step a lot of times when they're making the deposits. So I just wanted to go over how you do that exactly. So when you're recording a payment on an invoice, the money is put into a holding account called undeposited funds. Then you use the make deposits function to move the money from undeposited funds into the bank account. So what QuickBooks is doing is trying to group your individual deposits to match, or your individual checks to match actual bank deposits to make bank reconciliation easier. So what happens a lot of the times is people record the payment on an invoice, and then they skip that make deposit step. They think, okay, I recorded that payment on that invoice, I'm good to go. But that money doesn't actually hit your bank account in QuickBooks unless you use that make deposits function. It just sits on your balance sheet in the holding account called the undeposited funds. So basically, for an example of how this works, you have a client come in and make a payment on an invoice. They write a check to you. You take that check and put it in an envelope in your desk drawer. Then maybe you don't make a bank deposit until the following day, and in that time, 2 more clients have come in and given you checks. Now you have this envelope in your desk drawer with 3 checks in it. You've received payment on 3 different invoices, but you're going to group those 3 checks together into one deposit into the bank account. So they're all going to show up as one lump deposit in your bank account. So when you go to reconcile, you're not going to reconcile each individual check, you're going to reconcile the lump deposit. So that's what QuickBooks is trying to do for you. It's just trying to make the deposits in your checking account match what's in your actual bank account. So what you need to do is make sure that once you record a payment on an invoice, that you then go into make deposits and move the money from undeposited funds into the bank account. If you don't do that extra step of make deposits to move the money into the bank account, then your revenue could potentially be understated, deposits may get recorded twice, and accounts receivable can become incorrect. So what can happen is you'll receive that payment on an invoice, and then you'll go look at your bank account and you'll say, hey, where's that deposit? Like, I don't see where that check has hit my bank account. So then you'll think maybe that it didn't get recorded correctly. You'll record that check again into your bank account to offset it against revenue. Suddenly you have that check recorded twice in revenue, overstating your revenue. Then you have the check sitting once in your bank account and once in undeposited funds. And everything can get duplicated, and it can make your accounts receivable incorrect and your revenue incorrect. So that's one, just to make sure that you do that extra step to move everything out of undeposited funds. I mean, if you are making your bank deposits daily, anytime you pull up your balance sheet in QuickBooks, there should not be a balance in undeposited funds. If there is, something didn't get moved through into your bank account. Okay, so after we've gone over everything I wanted to talk about, we should have a better understanding of how to memorize reports, how to make accounts inactive, how to make how the accounts copy works, how to make adjusting journal entries, how to correctly record payroll from an outside payroll service, and how the undeposited funds account works. So that's everything I wanted to go over today. So I'm going to go ahead and unmute everyone. So if you guys have any questions, you can either type them in the chat or you can ask them out loud. Does anybody have any questions? Okay, so while people are thinking about questions, I just want to remind those people who came in late, if you haven't already done so, make sure you register at smallbusinesswebcast.com so you can be made aware of any future webcasts. Also, feel free to check out our website, HuddlestonTaxCPAs.com, if you need any help with accounting, bookkeeping, tax preparation, we can help you out. Also, after the presentation, we'll be emailing you a coupon for a service that we're offering where we would go over past tax returns for you to see if everything was done correctly. Maybe we can find you a bigger refund. We do that for free. Then if we found some errors and you'd like us to correct it, then we can go about correcting those for you. We have found people lots of money in the past from mistakes that have been made, so feel free to contact us about that once you get that coupon. Does anybody have any questions? Okay, if you think about questions after the presentation is over, feel free to email me or give me a call and I can go over those with you. And if you're in the Seattle area and you need help with QuickBooks training, I am available for one-on-one QuickBooks training. So feel free to contact me if you need help with that. So if there aren't any questions, then I guess that's
Will you be emailing the slides or posting the webcast somewhere? Yeah.
Yeah, we'll be emailing the slides to you, yes.
Okay, thanks.
Okay. Okay, well, that's all then. Everybody have a great day. Thanks for attending.